Hi, everybody, and welcome back to Friday Focus. This is Ross Healy, the chairman of Strategic Analysis Corporation. And today I'm going to be discussing the two extreme valuation zones, which we call the bubble zone on the high side and the blue zone on the low side. And they have some very interesting characteristics. And to make things a little more lively, I'm going to feature two stocks, Nvidia, the world's biggest stock, and we're going to look at precision drilling, just another energy stock, but it's an interesting stock nonetheless. Now, notice when we start off with Nvidia, it started down here way back in 2018 at its BB price. That's its bubble price. The bubble price is defined as 1 over E squared, E being the Neperian growth constant, E. Nvidia had a beautiful run until 2021 too, and it got up here to its, well, you can see that over here, its HB6 price, and that happened to be a peak valuation of Nvidia back in 2000. Look how high Nvidia was relative to its fair market value. So a setback was due, and it did. In fact, it fell all the way down to its fair market value, although, of course, fair market value fell away underneath its feet. However, it's subsequently recovered and has moved considerably higher. Now, what I want to do here is I show you the key breakpoints, starting with the bubble, the HB1, and the high, that's high bubble 1, high bubble 2, and so on, all the way up to high bubble 8, which is the mathematical, theoretically, highest valuation that the market will allow. What are those in actual price to book terms? And if I click on here, we can see here, the bubble price 7.4 times book, 1 over E squared. And these are all power law multiples of E, okay, going all the way up to the HB8 at 55 times book value. Now, where is Nvidia today? Well, it's really interesting to watch the stock after its correction. I actually put out a sell on the stock when it got to the HB8. The stock had quite a setback, about a 35%, and has since recovered and is just sort of sliding along its HB6 price. Remember, that was the 2000 peak. It's going to be interesting to see what happens here because the slope of the fair market value is slowing down. So it would be intriguing to watch if the stock fails to break out here. The likelihood is that at some point we are going to get a correction down to its fair market value, but that's a story for another day. So we've got a growth stock zone. Now we also have to have a place for stocks to go to die. And that is what we call the blue zone. And I feature here precision drilling because the stock had a deep plunge into the blue zone. As I said, that is the place where stocks to go to die. And by dying, we mean that their balance sheets start to disappear under your feet. And you can see the slope of the balance sheets here as the stock went lower and lower and lower into its blue zone, finally hitting a bottom way down here at the HB8, which I'm sorry, we don't actually show here. Now, if we want to know what those values are, okay, then I can click on that price to book, And again, we can see then that these are the blue, the deep blue 1, deep blue 2, all the way down to the deep blue 8. And the last value that we show is the deep blue 6. Okay, the price to book is 0.14. At the very, very bottom, the price to book is 5 cents per dollar. So you can tell it's getting very, very cheap. Couple of things I think that is worthwhile noting about precision drilling. And that is when the stock recovered. This was that COVID meltdown when the price of oil actually went, well, when the price of oil is negative, the demand for drilling falls way to zero, and the stock price reflected that. However, in the recovery, the stock recovered all the way up to its blue price. That's that dark blue line there. And we have a very powerful rule of thumb, and that is to say that when a stock breaks out over its blue price, having been in its blue zone, it tends to head directly for its normal price, or a price to book of 1. In other words, what the market is doing, it's firming the value of the balance sheet, and the stock goes immediately there. By the way, that's a gain of 66%. So when you see this kind of thing developing, it's one of the really surefire ways of making a lot of money very quickly using SVA. Well, sad to say, after backing and forthing above its blue price and its normal price on the top, the fair market value, the earnings are falling again, and the stock is slipping back now into the blue zone. That, however, is a story for another day. I hope that you have enjoyed the little excursion into the extremes of the market, and you know now what to do if you encounter these companies. They can be very, very risky, but they can be also very, very profitable. Anyway, that's it for this week. I will see you next week.